Welcome to this Booster Program Refund webinar. So today we're going to hear about, find out more about community shares and then hear more about our ReBoost program. So there'll be a couple of people speaking on the webinar today. There'll be Naomi Sampson from Power to Change, Alice Wharton from Co-ops UK, and Isla McCulloch from Co-ops UK. And I'm Lucy. I'm going to be facilitating the webinar today and going through the slides and things. So we have got a chat function on the webinar today, so please use that to speak amongst yourselves. But if you could put all your questions into the Q&A box, and then I can put those to the panel. We won't be monitoring the chat, but we do monitor the Q&A, and then they all get recorded. And if we don't get around to answering your question during the webinar, we'll email you a reply at the end. So we will be taking questions throughout the session. So there are a couple of sections where we can ask questions. So do put them in and we'll try and get through as many as possible throughout this session. So without further ado, I will hand over to Naomi Sampson, who's going to tell you a little bit more about Power to Change.
Brilliant. Thanks, Lucy. Good morning, everybody. So I'm going to talk a bit about Power to Change and what we mean by community business, and then we're going to be looking at what do we mean by community shares in case anyone's new to community shares, and then I'm going to hand over to Alice and Isla to talk us through the ReBoost programme, and at the end we'll also be talking a little bit more about the other Power to Change programmes as part of our renewal initiative. Okay, so Power to Change aims to build better places through community business. We're an independent charitable trust that supports and develops community businesses across England. Community businesses are locally rooted, they're community led, they trade for the community benefit and make life better for local people. So from pubs to libraries, shops to bakeries, swimming pools to solar farms, community businesses are creating great products and services, providing employment and training and transforming lives. So what do you mean by community businesses? They can operate in many different sectors, but they all have four common different traits. So they've all got to be locally rooted. That means the business is rooted in a specific place, like a neighbourhood, a village, or a defined area, like a ward within a city. The community business should know the people in their community and responding to their needs and making use of their strengths. They should be accountable to the local community. So they can be structured in a way which allows community to have a genuine say in how the community business is run. So that's about maybe have through ownership, through membership, or regular and ongoing consultation with the community. So community businesses all should be trading, so they should have a clear business model and a trading model where they're selling goods and services, and then any profits which are made are reinvested back into the local community. And as part of that, they can then demonstrate they've got broad community impact. So we want to see it's not just necessarily helping one part of the community, it's trying to benefit a lot of people in the community. Okay, so we're really excited to be launching the Community Shares ReBoost programme today. ReBoost is part of Power to Change's renewal initiative that is providing a package of support to community businesses in response to the COVID-19 crisis. A little bit more on the other schemes later. So ReBoost aims to support community businesses to raise community shares capital that can support their recovery or pivot or expand the business in response to COVID-19. The programme provides a really great positive opportunity for community businesses to rebuild from the ground up and positive, engage, motivated communities to help protect and sustain key services and assets in local neighbourhoods. By attracting and engaging members to invest in community shares, they can become more robust and resilient. We're really pleased to be working with the Community Shares unit at Co-operatives UK, which is a partnership between Co-ops UK and locality. They, again, a real sort of leading sort of organisation and force around community shares, and they have a real focus on growing the market and focus on quality through the community share standard mark. And they already, as you probably, some of you may already know, manage our current Community Shares Booster programme, which has already made investments over £2 million in community businesses across England, including sports, community shops, woodland, solar and hydro schemes, as well as community hubs. Okay. So before we go on, I want to show you a little video so that people understand what we mean by community shares. So this is where the tech hopefully works. I think Lisa's just trying to get the right web link up.
Sorry, let me just get my the page back up.
No worries. Thanks, Lucy.
Seconds. Just got too many things open.
Oh. Maybe at this point we can introduce ourselves.
Yeah, you too.
Oh yeah, great. Thanks.
So, my name's Alice Wharton. I'm at Co-operatives UK in the Community Shares unit, and I work here with my colleague Isla, who will be telling you more about Community Shares. So Isla leads on the standards work that we do at Community Shares unit, and I lead on the investment work as well. So we have a great team of colleagues, both within and external to the organisation as well. So I'm just wondering if this doesn't work.
Ready?
Yeah.
Oh, great. We're ready.
Once upon a time, there was a community that didn't want the last pub where they lived to close down. They had great ideas about how it could be much more than a pub, but they needed money to make their dreams come true. The banks didn't think the community could make it work, and the local council didn't have any money to spare. But there was a group of people who did believe in them. Themselves. If they all pulled together, they could pool their money, from the well-off to the not-so-well-off. More than 200 enterprises in the UK have raised finance this way. From football clubs to piers, wind farms and local transport. What links them all is they respond to a need a community wants to see fulfilled. More than 40,000 people have already invested this way, often from as little as £50, but have raised amounts from £20,000 to more than £1.5 million. All this money was raised through people buying shares. But these weren't ordinary shares. They were community shares. Community shares don't work like normal shares, where you might be allowed to sell your shares to someone else. And your investment isn't a donation made in the hope that things will work out. At the heart of a community share issue is a business plan and offer document that shows how the money being raised will enable good things to happen. Your money will be backing something that has a real chance of success as a viable business. And when a community backs an idea by investing, it makes it more likely that other people will too. And the more successful the enterprise is, the more likely it is that people will get their money back. You might even get interest on your shares and a tax break on your investment. Regardless of how much you invest, you all have one vote. That means you and the other investors control the enterprise. And if you think it's being run badly, you can do something about it. Sharing ownership with others means you share the risk and the benefits. We're helping enterprises, supporters and advisors to use community shares. And
Thanks, Lucy. That's great. So shall we jump back onto the slides? Abby. So that video gives you a really good overview of community shares, but it was made a few years ago now, and the great news is that actually community shares since that video was made have just gone from strength to strength, and we've really seen this model become increasingly popular across the UK, and yeah, being used by an even greater diversity of businesses. We're seeing loads of innovation and loads of different types of businesses. We've just published, and this is a graphic from our latest report published this year on the state of the market, where now we're looking at over £155 million raised through community shares by over 100,000 investors, which is fantastic. That's over doubled since that video was made. And I think really excitingly, we found as well that businesses that have used community shares to raise capital, of them, 92% are still trading today, which is about double the rate for your traditional private enterprises, which is only about 46% survival rate over 5 years. We just ran a really big survey of over 100 societies who've used community shares, and 85% of them said the community share offer as a way of raising finance specifically has had a positive impact on their trading performance. So it didn't just help them raise the capital they needed to get off the ground, but the structure of it, and through investment, bringing your community in as members, has made a real difference to their trading. Where they're often operating in maybe areas of market failure, they found that suddenly these businesses are thriving with community buy-in. So we've had some really positive feedback on community shares through this latest survey. Part of the thinking around the ReBoost fund when we were designing it as well is that because community shares is such a flexible and patient kind of capital compared to maybe debt finance that I know we've been turning to a lot recently with the crisis, we've seen a quarter of organizations, and this is pre-COVID, already go back. 25% have already gone back to community shares to raise finance for new initiatives, for growth, or whatever it is. So even before COVID hit, people were already going back to community shares, and that was part of the thinking behind this ReBoost fund, is to go, actually, this is a better option for if you are community minded, if you're already running a community business, and community shares is going to be one of the best forms of capital that you can raise to either get through this or diversify the business and change what you're up to. So that was really a part of our thinking. We also found in our survey that 80% of the investors who invest in community shares do it for the wider social environmental impact of the work you're doing. So only about 20% invested for the financial returns, which shows that, you know, people are really committed to this investment. It really is a social investment. So yeah, really positive story. So in terms of some of the technicalities, you know, Alice and I are here to chat. I think it's really important, we'll come to the end of this webinar, that if you have any technical questions or questions at all, we're at the other end of the phone, because we know that every society is different. But it is important to note now that you do need to be a cooperative or community benefit society to be able to issue community shares. And looking at your governance now might be something you do sooner rather than later. And I think the video covered a lot of the other sort of technical things. It's one member, one vote. They're withdrawable shares, but they're non-transferable, so they can't be sold on to anyone else. And yeah, they're flexible, patient capital, which is probably what you're looking for right now to get through what is going to be a difficult time. So yeah, I'll go on to the next bit now. We can start talking about the fund in more detail.
So the ReBoost fund is part of the overall booster program. The booster program is where we offer grant support, and also we actually invest in societies as well in their share offers. So hopefully what you will have already done is gone to the booster program website and had a look at the guidance notes for the ReBoost fund in particular. And like Naomi and Isla have said, you know, this is all about how we can further support community businesses or businesses that want to become community-owned businesses during the crisis or after the crisis of COVID especially. We've also seen, hopefully as a whole group of people, that the groundswell of this kind of community engagement and the importance of community is being felt more than ever now. And so we really want to maximise that momentum and to enable as many businesses to use community shares to either refloat their balance sheets and make the finances a lot more healthy, to enable the business to survive, to bring more people into membership in terms of co-owning the businesses. And also, if you feel like the business needs to or can take the opportunity of pivoting, of diversifying in response to COVID-19 and the rest of it, then this is a great time and a great fund to use. We're specifically looking for groups that are using community shares to bring this model into communities or areas that have not traditionally used community shares funding as much. And especially more deprived areas or BAME-led groups. But bearing in mind that the booster program overall is a research program as much as a funding program, so we're really interested in seeing people apply to us who are really trying to use community shares in a really interesting and new way, as well as filling in the gaps financially. So if we have a look at the next slide, the Boost programme has two strands. It has either a grant support strand or an equity strand. You can, as an applicant, you can apply just for a grant to develop your community share offer, or you can apply for just the equity if your community share offer is ready to go, or even already live, or you can apply for first a grant and then equity. In terms of grant, the grants there for the ReBoost fund that we have just launched, the grants are up to £5,000. And this is to help you develop the share offer itself, the supporting business plan, to pay for the costs of doing the standard mark assessment. So this is the community share standard mark that Isla's just going to talk about in a sec. And typically we will expect your grant application to be about 10% of what your share offer total target raise is. And then the second part is that we can offer match investment. So we would be investing alongside the community on exactly the same terms as the community. And this is the whole point of the Boost programme, is that we want to be working with you and with the community. We're not a lender and we're not a grant provider necessarily. We want to be investing on the same terms, the same types of patient capital, and being as supporters of your business to enable it to become as profitable and as viable and sustainable as possible, so that you are able to survive as a business and also repay your investors over time. So in the ReBoost pot of money, we can invest up to £25,000 to match community investments in the share offer. And then in the guidance notes, there's quite a few different areas that we suggest that you could use the ReBoost funding for. So hopefully you will have had a chance to have a look through these and see if any of them apply to your type of business or what you're hoping to do next. If there's any questions you have particularly about the different ways that you could use the equity funding, then obviously we want you to come to us now or even later, have a call with us, send us an email if you have some questions about if you would be eligible for the Booster programme. So have a look at these. But mostly, yeah, it's all about raising working capital, helping with your cash flow, refloating your balance sheet, where the reserves have been really depleted during this time, especially during lockdowns. If you're changing your business activities, diversifying, if you're trying to build membership, or even, you know, if you haven't yet got a community-owned business, but you want to convert a privately owned business into a community-owned business, then this is an ideal opportunity and time to do that. There seems to be a lot of groundswell around people coming together, and the idea of community businesses, community-owned businesses, is really strong at the moment. And the other thing is, if you have got an established community business, if it's rather mature now, you've had your share capital for quite a few years, it might be that you're ready to move into an open share offer. If you don't know what that is, then you can come and talk to Isla and myself about that. Basically, it means that people can invest and withdraw their capital on an ongoing basis rather than just with fixed time frames like you find with time-bound share offers. But that's for the more mature societies, and it's something for you to discuss with Isla and myself if you wish to. And then who can apply? So there's quite a lot of guidance on the on this about how to change this criteria, because how to change a fund in this particular pot of money of the Booster programme. Like Isla said, you need to be either a cooperative society, a community benefit society, or a charitable community benefit society in order to issue community shares capital. For this funding, you need to have a charitable purpose and a public benefit. So we're really interested to see what you're doing with supporting the wider community, not just your members, not just your shareholders, but what are you doing with the business to support the wider community, and how are you using your profits when you do produce them, which I'm very sure of. And the main thing that I need you to think about, if you go on to the next slide, please, Lucy, is that we've got quite tight timeframes for this. So we need to know that you are pushing forward, and if you're applying for equity, you plan to launch your community share offer by the end of March in 2021, that should say. The key thing for us to focus on here is that we want you to think about the state of solvency of your business. If you're not sure about how solvent or how well your business is performing at the moment, then we really recommend that you check out this guidance that we've produced with at Co-operatives UK about facing up to financial strife. The link's there. It's got a few tips and a few calculations to help you along the way. If you have any questions, again, do come back to Isla and myself. The key thing is that you don't launch a community share offer if it's not going to help the way that things are. We want to get you back on track, and we want to help in any way that we can. But if you're going to launch a share offer, you need to do it in the right circumstances. So have a look at that document and see if it's helpful for you. The next slide is just a few things that you can use the grant for. If you first apply for the grant, if you decide to go down that route, then you can use it for lots of different things in the run up to launching your share offer. So financial planning, looking at financial projections so that you can back up what you're saying in your share offer about when you hope to be able to allow withdrawals of investor share capital, and also if you hope to offer your investors some interest on their investment, then these types of financial projections are really important to be able to justify what you're saying. You may have some legal or governance costs, for example, if you're converting your legal form, or if you need to update your rules, for example. You may need some accountancy support if you're looking to get tax reliefs. That's a really important thing that you could potentially offer your potential investors. So do have a look into that and think about if you could use some of the booster grant to pay for that sort of support. Producing the share offer, obviously you need to have a really concise and attractive share offer document that's very clear, transparent about what is on the table for your potential investors. Part of that is to go through the standard mark process, so you can get those costs covered through the booster grant. That's where a licensed practitioner will go through it with an impartial view, make sure that everything that you're saying is very clear to the investors about what the proposition is that they could be investing in. And the final thing there, but something that you should think about at the beginning, is how you're going to engage your community of investors and how you're going to market and promote the share offer. From day one, you want it to launch with a big bang. You want on day one as many people to be investing. So if you do it online, or you have a totalizer in a shop window or whatever it is, then day one it doesn't just stick at zero. You go. And yeah, you don't want to start and then plateau. You want this continual projection of trajectory of share investments taking place over the hopefully rather short window of your share offer, so that you can just get going with your project. So that's about the grant. We have mentioned about the community shares offer, the community shares standard mark. So Isla can talk you through a few details about that, because you can include those costs in your grant.
Alice, is this slide, are you meant to talk through this slide first on equity investment?
Well, I think we jumped forward one, but we can talk about this as well.
Hi everyone, sorry, this is just Lucy. There seems to be some gremlins going on in my computer. I'm really sorry. I'm just going to come out of the sharing the slides and go back in. Sorry, I've been having some messages saying that there are grey boxes on the screen as well. I'm sorry about that. It looks completely fine on my screen, but obviously you can see sort of the things that I'm sharing. I'm not sure why that is. I'll just go back in and try and reshare the slides. Just bear with me 2 seconds.
I'm happy to chat through the standard mark just now, just touch on it because it links to what we were saying earlier as well. So for those who might have already done a share offer and might be going back to investors, you might have already gone through the standard mark process. It's a really helpful assessment framework to ensure that you're sort of covering all bases and being open and honest and transparent with your community of investors. If you've already gone through the standard mark for your first share offer, then going through it again for a subsequent one should be much easier, but it really depends on the sort of business proposition that you've got as part of this recovery. The Community Shares standard mark is really important because we found through that recent research that I mentioned that the vast majority of Community Shares investors in the UK earn the average UK salary or less, and have a low net worth, don't identify as high net worth investors or anything like that. So we're talking about, real ordinary people investing their hard-earned cash to keep your businesses going and to see them survive. So we really want to ensure that they are fully understanding what they're getting themselves into. We understand that community shares is still quite a novel concept to a lot of people. So the standard mark process is there to ensure that you as a society feel confident in what you're putting out to your investors, and that the investors themselves have that reassurance around what they're putting their hard-earned cash into. As Alice said, we have a sort of cohort of what we're calling licensed community shares practitioners who have worked extensively with us over the years and have vast experience, who can do the standard mark award for you. That process can be covered through the development grant, so you don't have to worry about the cost of it. And yeah, you'll be showing that you're, and from a booster perspective, we do need the standard mark to make the award as well. So if you have any questions on it, we can always answer those again later on or at a later date as well. Alice, do you want to chat through this next one? I'm not sure what order we're going in now.
Okay, so you can apply for a grant from the Booster programme to develop your share offer. If you're applying for other renewal funds, then you can apply for this one as well. Just don't, you can't double up on the same items. So we will be checking between programmes that we're not double funding items. The standard mark, we do highly suggest that you undertake a standard mark assessment because it's very good practice. Investors are looking for that on the share offer document. We're looking at it if you have the standard mark on your share offer document when you come to us for equity. So with equity investment from this particular ReBoost fund, we can invest up to £25,000, and that's matching whatever the community puts in. However, you also need to have in mind that you need to meet the minimum for the share offer to proceed. So it's a bit of a balancing act, but we can invest as soon as you meet your minimum, and we can match the community investors as well. We don't match other institutional investors. So for example, Big Society Capital, if they were putting in investment, but we do match other businesses, local charities, etc. We can't invest over 50% of the share capital in total because Co-operatives UK holds that booster investment, and we don't want to be a 51% shareholder. We don't want to be the majority shareholder. It's also much better that you have as many community investors as possible, because these are the people who are rooting for you. They're doing all the word of mouth marketing. They're your customers. And it's far better for you to have more community investors than it is for booster investors. So if it is that your share offer is really popular, then we're happy to be effectively crowded out to reduce the amount of equity that we invest if we've offered it to you, so that you can allow as many people in the community to take up that investment up to the maximum investment target that you have put on your share offer document. So those things are really important. The reason that we also ask for you to have gone through the standard mark assessment is because it speeds up our investment process at our end as well. And we really just want to get the funding out to community groups on the ground as fast as possible to deal with COVID and any sort of business development as fast as possible, so that you can get up and running and making really successful businesses. Just to go through a couple of the questions, the booster program overall has a few different funding streams. So some of you may have noticed that as well as the ReBoost fund, which is funded through Power to Change, we also have the regular booster program fund, which we have funding from Architectural Heritage Fund. So that is still open. The guidance notes are also on the website, so the two funds run concurrently. The criteria, if you want to be considered for the Architectural Heritage Fund, is that you're a heritage project working out of a listed building or a conservation area on the high street using community shares. But these two funds are running concurrently. It might be that you can straddle both of them and we could potentially fund your project from both of them, but don't worry, the application process is completely the same. Whatever fund you're eligible for, you just apply through the booster website, and we as the panel just put the pieces together and make sure that whatever funding is available, we can make it fit and get it out to you. So that's two of them. If you have any other questions, we'll go through them as well.
Okay, so there are a couple of questions in the Q&A box. I'm really sorry. I'm getting messages saying that there is a grey box popping up on the screen. I'm really sorry about that. I can't see it on mine. I apologize if you guys can. The screen looks fine to me. So I'm really sorry for the technical problems that we're having. This is a new one on me, I'm afraid.
It's Friday the 13th, Lucy.
Well, yeah.
We're all here. You can see most of it. The fact you can't see logos, we can probably cope.
Yeah, sure. So I think it's the panel that you can see, the actual control panel, but I have no idea why that would be happening. But anyway, let's go through some of your questions. I'm sorry if it's not, if the slides aren't great. So the first one is from Chris. Is the original booster program still running for a new community that is not necessarily set up in response to the crisis?
Yes, it is still running, but the funding that we have remaining from it is tied to the Architectural Heritage Fund. So, you know, the criteria is for that that it's like I just said, it's a project working within the heritage sphere. It's working to rejuvenate or revitalise the high street, using community shares, and in either a listed building or in a property that's within a conservation area. So if you don't think you're eligible for ReBoost, then think about whether you're eligible for the AHF pot.
Okay, great. And then do you have suggestions for how to launch a community share offer? Will you help groups to set up beforehand?
So the booster program's grant is specifically for launching the share offer. There's a bit of work to be done before that point, which we appreciate. So there are some other funding programs that you can apply to. If you think that that's your position, then you can still contact us and we'll signpost you appropriately.
Okay, do you have to do the standard mark?
You don't necessarily have to, but we very strongly suggest that you do. It's very good practice. It's very good for when you're actually writing your share offer document to go through the standard mark framework to make sure that you have covered all the bases. It's also, you can get very much tied up in the detail of your particular project and can't see the wood for the trees sometimes. So it is very good practice to have an independent person, a licensed practitioner, look through all your finances and the way that you've written the text, so that you don't get tripped up later on down the road when you are actually managing the share capital, you're running the business, you've already got a big cohort of shareholders, you want it to be as easy as possible, and so at the very beginning it's good to tick all the boxes and make sure that you've got everything covered, and that's where the standard mark comes in. We can invest in groups that haven't had the standard mark awarded to their share offer, but it takes a lot longer, and there's a lot more process involved in the back end, which you don't need to know about really, but it's just a bit more of a headache. And we just want to make the process as streamlined as possible, so you've got benefits of both sides. in terms of doing the standard mark.
Thanks. Can you talk about societies applying for grant and equity at the same time and about the IP schedule, please?
So if you need to still develop your share offer document and your business plan that goes with it, and if you haven't yet done your standard mark assessment, then by all means apply for a grant from the booster program. If you're already having these costs covered through another means, maybe your reserves, your donations, a different grant body, then fine, just do it through that and just come to us in terms of applying for equity. You can, if we award you a grant to develop your share offer document and the rest of it, then you can then come on to us for the equity element. But really bear in mind the timeframes that we're all working to. We need to get going and deploy this funding as soon as possible, which you'll see in the guidelines, and we'll also talk about in the next slide about deadlines for application.
Okay, and just one final one for this section. Is the equity you take effectively an amount of withdrawable community shares?
Yeah, we are investing in the booster program. We're investing in community shares in the same way that anyone else is in the community. We invest alongside the community. We're not any different. This is not a loan. It's not a donation. It's not a grant. This is equity. So we as Co-operatives UK, who hold the investment, we are going to be an active investor in the societies that we invest in. So that means that we attend the AGMs, we vote, we are as supportive as possible. We are going to be talking about you and bigging you up and telling everyone that we've invested in you, because we really want these businesses to not only survive but really thrive. And then what we do is, like anyone else, any other community shares investor, over time, patiently, according to how well the business is performing, then we will withdraw our capital, and then we will reinvest it in the next cohort of businesses. And that is the cyclical nature of what we're doing here. It's not a donation. It's hopefully going to be money that's used again and again and again to set up loads of community businesses that really work to produce the communities that we all want to see in our particular places.
Okay, that's great. Oh.
Yeah, can I just come in, Lucy, just quickly say that we get there's quite a lot around doing all the work around this, and just wanted to stress that I think because the timescales are quite tighter, that yeah, I think it's okay to come in with both the asks together and just to work with us, and because we know that every situation is slightly different, so we just encourage you to get involved. And I can see in the chat that Dave and the other practitioners on the call are here saying hi, and so yeah, great to say hi to the practitioners, and the link's gone in there already to the practitioners. So there is help at hand, and that's why the development grant is there, because it's not you trying to work out all this on your own. So get in contact with those practitioners as part of the development grant, and they're there to help you through this process as well. And so we get that, and through the standard mark, they're the experts and they're great, and yeah, they can explain it all at your own pace and work with that. So but yeah, the earlier start having the conversation with us and get in touch with Isla and Alice, I think it is easier the better, and then the more we can work with you and support you through. So I know we've said end of March, that's the ideal around launching, but I think there could be a little bit of flexibility on that on a case-by-case basis. So I think we could look into April time. We get that these things take time, so I don't want that to put people off coming and having the conversations, because we want to get behind the right deals. So yeah, just the door is open, come and have a chat.
Okay, fab. So I'm going to share my screen again. Fingers crossed it's all okay. So let's try again. Oh, and sorry, I'll just remind you, a couple of questions are popping up in the chat box. So I'll just remind you to pop them in the Q&A, and then we'll pop them to all the panelists. Okay, I hope that looks okay.
Yeah. Okay, so these are the deadlines for application. We meet as an investment panel on a monthly basis, and we have a deadline of these dates here so that we have enough time to assess them in detail. So what to do if you are interested in applying, please do read the guidance notes. Maybe read both sets, so the boost, the regular ones, and then the ReBoost ones as well. to try and work out what are the focus points for your particular application. If you're not sure, like we said, do give us a ring, drop us an email. The details are in that little orange box at the bottom. And then the application is online. So whatever part of the funding you're applying for, it's the booster program. So just go to the booster program website, the application button's there, and the first stage is that you pop in your EOI, your expression of interest. If we haven't already had a phone call, then we may well have a phone call at that point, and then we check internally if you are eligible. And if you are, then hopefully within a week, you will be invited to full application. So that is also just a quick form. You have an opportunity to upload any documents that you already have. Maybe you've already done your share offer, or you've done a draft business plan, or you've done a community engagement plan. So you can show us what kind of stage you're at and what kind of appetite there is already in the community. Because like we said, we need to get these share offers moving quite pronto. And then, like I said, we meet on a monthly basis. We get through as much as we can in these jam-packed investment panels, and then hopefully we can get the investment or the grant decision back to you as soon as possible after those panels, so that you will be able to crack on with the development activities in terms of the grant, or with the equity, you can use that as a way to demonstrate to your community that you've got institutional investors supporting you, and hopefully you can leverage in more investment because they may well build their confidence on a personal investor level. So that's a quick run through of what you do and how to go about it and when. And then the next slide is just about what we've been doing so far. So we've been doing the booster program since 2016 at Co-operatives UK. We've invested in 33, I think, societies now, varying between £6,000 and £100,000 in each of them. And we've invested just over 2 million, and that's brought in 5.2 million from the community. So you can see the leverage effect there from the booster program. More generally, and this is a bit of a snapshot from the research. For every £1 that's invested in community shares, we see an additional £1.18 leveraged in through grants and loans. So often grant bodies and banks are reassured by the fact that you have got this big groundswell of community support behind the business. If they're a grantor, then they feel like the impact of their grant would be greater. If you've already got a huge amount of community behind you, these are your potential customers and clients and what have you. And the same with banks, you know, they want some reassurance that what they are loaning to is actually going to be able to be repaid. So there is a huge competitive advantage of using community shares within your funding mix. If you're interested in some of the groups that we've supported through grants, equity, or both, then have a look at the stories page. You'll see that we've invested in a historic flour mill where they're grinding their own flour to make bread, and everyone wants flour right now, or they did back in April especially. We've invested in skate parks, garden centres, community hubs, village shops, pubs, all sorts. So whatever the trade of your business, don't feel like it's not for you, because it could well be.
Okay, so we'll go back to some questions. I'll stop sharing again. Okay, so we've just got a few more in. So how do you actually withdraw the shares? That's from Glyn.
Isla, do you want to take this one?
Not sure whether Glenn means as the booster program or as individuals investing in the share offer, but I guess for both, as individuals. So most share offer documents, as I'll always spell out a period where a sort of pre-withdrawal period, which is why they're quite patient. So it's normally around 3 years, sometimes more, sometimes less, until the business is sort of trading profitably and on a firm footing. Investors can then request to withdraw their money, and they can They can withdraw all of their investment or some of their investment. Really depends on how much they've invested. And the society normally has a sort of a policy on how much can be withdrawn every year, and that will have been part of the original share offer document and plan. Essentially, that request is granted by the management committee or board of directors, who go, yeah, we can afford that, and that's within our policy, and it's paid back. And if it's their entire shareholding, then they cease to become a member. If it's only some of their shareholding, then they will still be a member based on what they still hold. And that process is very similar then from Co-ops UK's perspective as well. And because we're investing larger sums of money, we would never request to withdraw all of that money in one go. We pro rata, or how do you describe it? Yeah, to what's available, so that other shareholders and investors can also withdraw their money that year. We would never take up the whole allocation that's been set aside for withdrawals on an annual basis. I hope that answers your question.
That was great, thank you. This is from Bob. I'm looking at the application page. Is it the same EOI as the main booster program?
Yes.
I think Bob's come back and said he's found it now, actually.
Oh, fab.
Which is good.
I was going to say, we can
And
send
it
on the
is.
link, can't we, to it. And if you've not seen already, Co-ops UK have launched a fantastic new website this week. So,
But it's not on that yet.
it's not there yet, but the other program, the other website is open. So yeah, it's the same portal, trying to make it easy for people. So
Yeah, we'll put the link to it. It's Community Shares Booster, all one word, .org.uk. And if you do /apply, that's exactly where the application button is. So you can submit your EOI. Doesn't matter which fund it is. It's just a program.
It's one form.
Great. Joanna said, I represent a community shop that is currently set up as a CIC. We want to add a community cafe, but need to change to a CBS. Do you have any advice on how to do this and how long it will take?
It shouldn't take too long. I'd say just get in touch with us, Joanna, because we might be able to fund that through the development grant. And our advice team at Co-ops UK do this on quite a regular basis. That's part of our registration services. So yeah, just get in touch. If you're, as long as you're happy with it, like sometimes the thing that takes the longest is getting the community on board with becoming a CBS, or getting the board on board with becoming a CBS. But if that decision's already been made, then just get in touch and we can support you through our registration and maybe pay for it through the development grant as well, if you're going to go for Booster.
Okay, we've got quite a long question from Maggie with a link to a Facebook page. So I think we'll send that question to the Co-ops team and get back to you individually on that, because I think it's quite specific to your project. Can the society not allow withdrawal if their judgment is that they can't afford to?
Yes.
Yes.
So every year at the AGM, the board will present to the investors, to the members, exactly what the financial status is of the business. If they can't afford, if they haven't been profitable, or it's been rather a lean year, then it's much better for the society to decide to not allow withdrawals that year and not pay interest on the investments, so that they're in a lot stronger position to be able to be resilient to any economic knocks in the coming year, and potentially grow the business as well to a much more profitable place, so that the following year that they are then again hopefully able to allow withdrawals and pay the interest. The interest rate for community shares is not fixed. It's what the society aspires to pay in order to attract the investment. But the whole point of community shares is that it is patient. There's no fixed payback date, like a bank loan, for example, and there's no fixed interest rate like a bank loan, because that element of flexibility enables the businesses to ride out whatever's happening in a much more helpful manner. So as investors in community shares, that's what needs to be clear on the share offer document, and that's what needs to be communicated at each AGM, exactly what the financial position. It's all about transparency. Everyone's a co-owner, and it's all about the long-term success of these businesses.
So there's a question just about the video in the slide. So yeah, there will be a copy of this recording of the webinar sent round to everyone and the slides and the webinar link will be on the Power to Change website as well, and that'll be sent around to everyone who registered after the session. This is a question from Chris. What happens if the business hasn't got enough spare cash to allow withdrawals?
Yeah, so
go on.
So again, if it hasn't got enough space for withdrawals, it's about being very clear to investors what the state of play is, what's caused that, whether you're doing business, you're expanding your business and putting more money into that for the long-term success and profitability, or whether it has been a very, very difficult year for one reason or another. And for a lot of businesses, obviously this year has been particularly trying. So as investors and as an investor ourselves at the Booster Programme, we understand that the interest that we get back this year is going to be very different to what it would have been last year and what it would be next year, hopefully. So that's the whole point about community shares, is investors have to be understanding what the model is as much as the businesses that use it.
Okay, great. We've just got one more question. If you do have any last minute ones, just pop them in and we'll take them now. But if not, we'll just have this last one. What if you're not a CBS?
I think there's always the option to convert to a CBS if it's the right thing for you, and that is worth thinking about whether that fits your, your mission and your purpose and your aspirations as an organisation. There are other funding pots available from Power to Change where you don't have to be a CBS, and not just Power to Change, I suppose, but I think Naomi's going to chat through some of those as well. So, I wouldn't recommend necessarily converting to be a CBS if it doesn't suit you and it's not the right thing for your organisation, just for the sake of this funding, because there is other funding, and this is, it's a lot of work and it's a real commitment to decide to do a share offer and convert to be a CBS if it's not your end goal anyway.
Okay, great. Well, that's all for the questions from that section. So we'll go back to the last few slides.
If that's giving people a real flavour, and it's a good demonstration about how patient community shares actually are and how much you have sort of control and working with your members and investors. So yeah, and setting terms and conditions around it. Right, okay, I'll just briefly cover off the other parts of the Power to Change Renewal Initiative, which is a package of support for community businesses in response to the COVID-19 crisis. There's a link there at the bottom to find out more with lots of the resources. So I won't go through them all in details. There are various different webinars happening around all these different initiatives. So please just keep in touch via, mainly look for us on Twitter, or if you're not signed up to our newsletter already, then I recommend doing that, because loads of really useful information comes out through that. So the renewal fund is around grants, unrestricted grants between 10 and 20,000 to support community business to adapt and evolve to the changing circumstances. That could be used to cover core staffing costs, contribute to capital costs, adapting your community business, so to make sure you can keep providing support to local people. Again, with a lot of our programs, it's trying to work with those communities that have been hardest hit by COVID. So just sort of bear that in mind as well. That round, we had one round of that shut, the other one opens up in January, so keep an eye out for that. We've got Powering Up, is a tailored support package designed to increase community business leaders' knowledge, to provide wellbeing support, to help build peer relationships and boost recovery across the sector as well. That's opening for applications next week, so that's good, and you can apply to these programs, so just don't have to just apply to one, so do bear that in mind. Also around kind of the type of crowdfunding, so we've talked about equity-based stuff today, but I guess donation-based as well. We've got Community Business Crowd Match soon being launched next week, which is, we've teamed up with Crowdfunder to do this programme. Crowd Match is there to provide an incentive to maximise your crowdfunding campaign by match funding what you raise from the crowd up to £10,000. So that's, again, helping new groups get set up. So if you've had a really good, strong neighbourhood response, you want to sort of build on that and look at that, as well as helping existing community businesses maybe cope with increased demand or looking at changing their business model. We've got a strand of work around community asset protection, So working with all our various different partners, including Co-operatives UK, Plunkett Foundation, Locality, we've identifying organisations which we funded which run community-owned assets that might have been really badly affected by COVID, and providing some tailored information, advice and guidance to protect those assets. Some of you may already be aware of the Community Business Mutual Aid Group, which was created in response to COVID, and that provides practical peer support, solidarity and inspiration to all members. There are regular newsletters and monthly Zoom meetings, so that's funded by Power to Change, and the Mutual Aid Group was set up by Practical Governance. And then we're also, as we have a real strand of work, what we do at Power to Change is about making the case for community business. And so it's really important that we continue to do that and show the crucial role that community businesses do play within the economic and social recovery across England. So to do this, we do need your help. So if you have a great story that demonstrates the impact of your community business and what it's had on the recovery of your local area, then please do get in touch with us to the comms@powertochange.org.uk email address, but we can send that round. So that's just a whistle-stop tour of what else is available. And I think we're out of time. So I just want to say thanks very much for Alice and Isla for joining. And John and Jed have been in the background answering some questions as well. So they also work at Power to Change and are a fountain of knowledge around community shares. So we have run through an awful lot. It's a lot to digest, go away. I'm glad we've recorded it, do that. But our takeaway is you've now met Alice and Isla on this, and they are fantastic and very approachable. So we do really encourage you to just pick up the phone, and they are there to speak to you. So just any questions, do get in touch. So, and thanks very much. And yeah, good luck with the rest of lockdown, folks.
Thanks everyone. Apologies again for any technical issues, but everything will be on the website, and we'll send around the recording. Thanks everyone. Have a great weekend.
Thanks Lucy. Thanks folks. Bye now.
Bye.